Hello, I'm Bernard Hickey from interest.co.nz and welcome to another in our series of double shot interviews. This is our monthly roundup of precious metals with Mike O'Kane from NZ Mint. He's the head of Bullion. Welcome back to interest.co.nz, Mike.
Thanks, Bernard.
The price of gold and silver, it's been on a rocket in the last month or so. What's happening?
We're hitting records, 30 plus year records for silver, currently sitting at about $41 US, so that's fairly significant. Gold, we've hit 1475 over the weekend, again another significant number. We're now in record territory for pretty much gold historically, never been this high. Silver, we've been there once before with the Bunker Hunt brothers. Obviously there's a little bit of artificial inflation back in the 80s with them, but we're definitely on a track for some pretty record gains.
Gold, what's happening there?
A lot of gold is a flight to safety at the moment. We've got the Middle East, Libya going on. You've got essentially the US reaching their debt ceiling, or in theory reaching their debt ceiling. You've got the ECB raising their interest rates. You've got China raising their interest rates. It's essentially a perfect storm to keep pushing these prices up in the short to medium term.
Because when the price of oil goes up in US dollars, sometimes people buy gold to hedge against inflation.
Correct.
It would be interesting to see a chart showing the price of oil in ounces per barrel.
That's something we'll look to provide, and that's one historical measurement for the actual value of gold as a gold to oil ratio. Historically, they've trended very, very similarly. So if you look at a historical trend over the last 100 years, say, you can actually see them tracking together very closely. It's only in the last 5 years, for example, that we've actually seen the two disconnect. And for a period, they were disconnecting, connecting, disconnecting, depending on what was going on in the markets. As oil, and we've already seen this once when it broke through $100 last time, gets higher, then the speculative aspect of people getting into gold to mitigate or hedge against that increase becomes a lot higher, and the demand for gold becomes a lot higher off the back of it.
Now, there's been a lot of talk in the last month that the global economy is starting to fire up again. There's talk about the European Central Bank increasing interest rates.
Yep.
The Fed is nearing the end of its money printing. End of June is when it's due to stop and potentially then start increasing interest rates. How is that affecting views about inflation, and therefore how's that flowing on into the gold and silver markets?
Well, the biggest speculation in the market at the moment is inflation in the US, and depending on who you talk to, you get everything from deflation continuing or through to hyperinflation, or worst case scenario to stagflation. Now, gold historically has been anti-inflationary, and one would expect to see that to continue. However, what we've also got to take into account, it's not just the US dollar that's influencing this now. The ECB interest rates helped push the gold price up recently. Chinese interest rates were raised, I think it was Thursday last week. That essentially was a blip on the radar as far as the gold price surging was considered. Normally we'd expect to see a fairly significant pullback in the gold price when the Chinese increased their interest rates. We didn't see anything. It just carried on as is. So I think what's happening is we're starting to see a little bit of a disconnect from that going on at this point in time, at least.
So that's the inflation story. What's happening on the supply side with gold?
It's getting tight. Essentially with demand up, you're looking at numbers where the price of silver's increased by over 30% in the last 4 months. So we're talking from the beginning of this year. Gold's up nearly 15%. Demand is skyrocketing at every level. We're just waiting for the next batch of numbers to come out from the World Gold Council on what their demand and supply figures are globally. But given that we're starting to look at longer manufactured supply times again, so anywhere up to 6 weeks at the moment, one would expect that those numbers have literally climbed through the roof again.
You're the head of Bullion at NZ Mint. What are you seeing in terms of getting your supplies of gold and silver?
We're in the same boat as everyone else. Getting raw gold and silver, not such an issue. Getting manufactured physical product that you can trade and sell easily is taking longer as the volumes go through. So for a typical gold coin, for example, that we sell takes approximately 4 to 5 hours, man hours, to get to a point where it's retailable. If you're doing one, that's not a problem. But if you're doing 10,000, 20,000 a month, it becomes very difficult to keep that supply at that level that satisfies all of the demand. So we're starting to see an increase in demand times. On the flip side of that, we're actually seeing a lot more people sell back at the moment. So we're starting to see a lot more flow in and out of the market, locally especially, which is mitigating some of that factor.
Supply out of South Africa, one of the biggest producers. What's happening there?
There's an announcement overnight. The union that the South African miners belong to is looking for a 20% pay increase. Now, I know we all want a 20% pay increase, but it's looking like South Africa is going to go through another session of strikes and delays and issues. This is all still on the board, so there's still potential that it may be averted. But given historical issues out of South Africa, one would expect that they may have issues supplying again.
Now, looking at the silver price, it really has been the standout performer in the last month.
Sure.
Why has it increased 30% when the gold price has only gone up 15% or so?
Silver's more of a speculative item, so people buy gold as a safe haven, whereas silver tends to be bought more as a short-term gain for profit, or even as a quotation marks poor man's version of gold. So as the gold price has broken through different levels, we've seen more and more people turn to silver because it's what they can afford. Now, Kiwi dollar terms, we're talking just on $1,900 for an ounce of gold, which is out of the realm of a lot of people for investment. $60 for an ounce of silver is back within that realm. We're also seeing a lot of people have an expectation that the silver price is going to outperform the gold price. There's a lot of chatter about the historical ratio of 15-1 gold to silver. The average over the last 100 years is more like 44, 45-1.
And what is it now?
Currently, right at the second, 36-1. So we're still well above that 15-1 ratio that people expect to see it at. But in saying that, we're well below the average. Now, looking at the current volatility in both pricing, it may be that we see a turnaround very shortly, because the drop has been precipitous over the last 6 months or so.
How much of a factor of this is talk about the silver market being cornered again, and talk that JP Morgan, which is going through the courts at the moment, complaints about them cornering the market? How much of a factor might that be?
It's something we see come through every 3 months or 4 months. Pretty much every December for the last 4 years, we've heard about the COMEX shorting around 3 million ounces of silver, and everyone's sitting there rubbing their hands waiting for the COMEX to try and come up with 3 million ounces of silver to fulfill all the contracts that come due. As with anything, I'm happy to sit back and watch. It's one of those let's wait and see events, especially given the way the US markets and the way the US federal and the judiciary work. This may not amount to anything, or it could be the next biggest thing. But given that we've had these sort of announcements every year for 4 years, it's hard to know.
Now, just to go back to the Bunker Hunt brothers, for those people who aren't familiar, tell us the amazing story of what happened with the Bunker Hunts.
Back in the early 80s, and we're talking 1980 pretty much, the Bunker Hunt brothers decided that it would be a great idea to try and corner the silver market, JP Morgan. So what happened essentially is they continued to buy all of the open contracts in the open silver market to a point where, I like to say, they proved the exponential curve. As they continued to buy, they got to a point where they had, and this number's off the top of my head, it was around 80 to 90% of the open market. When the Fed decided that that probably wasn't the best option for anybody, and changed the rules overnight. So they, to all intents and purposes, bankrupted the Bunker Hunt brothers to try and stop them from closing out the market. They made a comeback a few years later. Probably the best place to look for the complete breakdown would be Silver Thursday, which is the historical analysis and breakdown of what they were doing, why they were doing it, and the values they were talking about.
They ended up in prison though, didn't they? They
did bankrupt us for prison. As I say, they came out again, tried it again, but of course the rules had been changed on them, so they didn't really stand a chance.
And people were watching them second time around.
Oh yeah, very much.
Yes. Fantastic. Mike O'Kane there, the head of Bullion at NZ Mint, talking about precious metals this month, and we'll be back again next month. We'll also include some links in the text below to some of the history on the Bunker Hunt brothers It's a great yarn in the world of business. I'm Bernard Hickey. That was another in our series of Double Shot interviews.